So in this short video, I want to talk about 5 overriding, mainly macro thematics that I think all traders should be watching out for and will be key talking points as we go through the earnings season. So take a look and trade the earnings season with Pepperstone. Well, arguably the overriding dynamic that we're going to see answered through the earnings season is the idea of liquidity versus earnings. Now, liquidity has been the dominant force, and rightly so. It is the oxygen that's running through the market's lungs. But you can see as the Federal Reserve's balance sheet's been increasing sharply, and of course excess reserves have been very prevalent, you can see the S&P's benefited from that, and that's benefited global equities, and it's also benefited high beta currencies like the Australian dollar, Kiwi dollar, and some of the emerging market currencies. That leads to the next point, which is valuation over liquidity, or valuation at least making more of a difference. As you can see here, earnings estimates have come down, but some of the concerns are that we get estimates down towards 110 by the end of the earnings season with the outlooks coming through. Now, why is that important? If earnings estimates are going to fall to $110 and providing the price on the S&P, which is this pink line, stays around similar levels, and of course the price earnings multiple is going to increase. On those current trajectories, we get 25 times. Now, why is that important? Because that puts us onto the same sort of multiple that the market was playing during the dot-com era, and one of the most expensive multiples the market's ever seen. Now, given the backdrop of deteriorating economics and lower dividends, perhaps that will matter more to price, and we could see some volatility in markets. Well, the third point is what the world looks like in a post-virus world. What's happening with capex, cost-cutting, dividends, hiring, all those various factors. And of course, the corporations have a major role in shaping the economic landscape themselves. We know that this is not really a financial crisis. The Fed have tried really hard to make sure it's not a financial crisis by adding, incredible liquidity into the markets. But this is more an economic crisis. This is more of a health crisis. And therefore, I think the corporations themselves have a really strong role in trying to develop our understanding about economics going forward. So listen to the CEOs and listen to what they say about hiring, about capex and spending as well. And that leads nicely into the fourth point, which of course is what the market's looking for in terms of pain points for the corporations. We're looking specifically at things like the US dollar, where 39% of corporates source revenue offshore. So of course the dollar's got an impact. If the dollar's got an impact, of course people like Donald Trump and the Federal Reserve are going to be very keen to understand how these guys are seeing the moves that we're seeing in the currency at the moment. Also very focused on what's happening in the oil markets. OPEC have come together with non-OPEC and we've seen output cuts, but is that enough given where break-even levels are at the moment and the idea we could see default rates, certainly from Shell Gas, really picking up going forward, even though the Fed's backstopping high yield? But ultimately, the most important situation is how price reacts. We react to price action, we react to price moves. We cut our losses early, we let winners ride. That's the secret sauce when it comes to trading. In this case, what I've done is I've set my MT5 platform so that I can see all the markets that I like to trade around earnings season. I've got my S&P, I've got my individual stocks, I've got the VIX, which looks at the implied volatility in the S&P over the coming 30 days. I've got gold, and also I've got corresponding markets such as the DAX. So you can set your workstation up accordingly. So trade price and trade it with Pepperstone.